All right, good morning, everyone. Welcome back. Happy Tuesday. Hope you had a good Labor Day. Good morning. We got some interference on the line. The wire trick isn't helping. Uh-oh. The wire trick's not helping. Let's see. There we go. Fixed it. Welcome back, everyone. We are fixed. Yeah, ES dropping 64.30. We're going down 64.30. Oh yeah, it's going quick now. Daily 20 rejection. 64.30 fail. This was all part of the game plan from last night. You guys that were in the Zoom call with us. The break under 64.30 was big, and that's what we're seeing right now. So embrace it. Could be a nice little downside move today. So this morning, the 10-year is rising. That is causing a lot of the weakness that you're seeing. Some news about the tariffs being, some votes about the tariffs being illegal, and that we might have to pay back any revenue created by those tariffs and blah, blah, blah. So a lot of sort of news going on with tariffs this morning, causing the 10-year to spike, causing weakness on the market. However, what's very interesting is that this all very clearly started with some key technical levels and some clear failures last Friday. So you guys that were prepared with us knew that we were very aware of the potential of a bull trap last Friday on the failure back under that all-time high, and that is exactly what Friday did. If you guys came to this live stream, our analysis on Friday was spot on. We talked about how we could have a bull trap under that key level on the ES, which we'll jump into momentarily. It created downside all day, which was gorgeous. And here we are again, more downside off that rejection of 65.02. So go back to the charts, right? Look at that 65.02 high that we talked about as the potential bull trap on Friday. And so you are continuing to see some weakness after seeing that fail at that all-time high breakout. So it's all making a lot of sense right now. Definitely was sort of bearish last night in our prep, and I can see it, happening as we speak. So some nice watches out there to the downside. If we actually get some clear downside, you should be very excited about it. There are some beautiful, and I mean beautiful, watches for some slippage, for some pullbacks after some nice upside moves. So I would love it. I think it would be a great trading week if we do see some of that downside come in, because there's stocks like Palantir, like Hood, like Meta with a huge gap, like AMD with a major breakdown point. So a lot of nice watches out there. If we get downside, I would embrace it. And that is why the quote of the day is embrace the dark side. You better embrace it, right? That's part of trading. Be open to being able to trade both sides. It's very, very important. So 64.30, that's our key spot today. We can see it's failing right now in the pre-market, so we're going to have to be watching that. Good morning to you guys out there. Thanks for joining again to the pre-market live stream. I hope that you are Hope that you are prepared for today, or at least getting ready to be prepared for the day. If you didn't watch our video last night, make sure to check that out before the open. Some big watches there. Some key, things that are starting to come true from the last night analysis. So really nice stuff. Hope you guys had a good Labor Day. Hope you feel refreshed, ready to go for the first week of September, first trading day of September. And that's about it. Press that like button. Subscribe to the channel if you're new. Let's dive in. So, let's pull everything up. Let's get situated here. And let's do it. Let's make it a beautiful day, huh? All right. Sensei. That's right. What's up, Jason? All right. So, S&P 500 futures, my friends. Let's start there. Actually, you know what? Let's start with some of the data. Let's start with some numbers, some economic calendar, earnings calendar. Let's go ahead and start there to start the week. Blessed. Appreciate that, brother. Thank you, man. Smash that like button. Thank you, brother. Love nature. Welcome to the stream. All right. Let's get that going here. Where the hell? Did they change this website? A little bit. All right. Hold on. Bear with me as I pull this up. Oh. Okay. I see what happened. I'm on the wrong page. Okay. All right. So, economic calendar. Here we go. Today, manufacturing PMI 10 o'clock. Maybe something to keep an eye out there today. First 30 minutes. Be cautious of the first 30 until that PMI comes out, right? Something we can be cautious of today. So 10 o'clock PMI. Tomorrow, JOLTS, 10 o'clock. Another day to be careful maybe until that 10 o'clock data. Thursday, non-farm employment change, unemployment claims. That's our normal Thursday data. So we can be watching out for that. ISM services PMI at 10 o'clock as well. And then Friday, average hourly earnings, non-farm employment change, unemployment rate. So nothing crazy, just our normal sort of red folder events that happen pretty much every week. So let's be watching those. ISM manufacturing, ISM services, non-farm, JOLTS, right? A lot of data about jobs this week, and that's going to be very important. So let's be watching that. That is number one. Wow, we're still failing pretty aggressively here. And then the second thing is the earnings calendar, which I believe we have one earnings that I'm interested in. Of course, this signs me out of X every morning for whatever reason. Why do you do that, X? Hold on here. Let me sign back in here now, folks. Bear with me. Here we go. All right. Earnings starting to come to the tail end of the earnings season. As you can see, starting to get pretty light on the earnings side. Geez, what was that? Garbage truck outside. It scared the shit out of me. Not much today unless you guys are foaming at the mouth about NEO, which I'm not. Some of you do for whatever reason. I'm not sure why. Tomorrow, Dollar Tree, Macy's, not interested. This is really the one I'm interested in tomorrow. Salesforce CRM. Definitely an interesting one tomorrow with some strength on some of the cloud names recently. Figma, that recent IPO that's looked dead pretty much the last few days. We're going to be reporting earnings on Wednesday. That could be interesting. 1-800-Flowers, the running joke of people trading this stock for whatever reason. 1-800-Flowers, not interested, but there you go. Broadcom, that's actually a big one. Okay, so we got Broadcom Thursday. That's big for semis. Lulu on Thursday as well. That's pretty decent name there. So there you go. There's the big three for the week. Salesforce, Broadcom, Lululemon. Yeah, that's what I would be watching. CRM, Broadcom, Lulu. Let's be watching those this week. A little bit of something to watch on the earnings side, but we shall see. All right? Okay. Yeah, and we do have Trump speaking at 2 o'clock today as well. Benny, we don't need to... Those adjectives are unnecessary. Yes, Trump is the right way to say it. Our president is trading at 60, or is speaking at 2 o'clock. That's another thing to be cautious of today as well. All right. With all that said, which is a lot of things that are sort of ancillary ideas to be paying attention to, what's really key here, as you guys know, is the key levels, right? That's the key levels. And the key levels are what's going to drive our decisions today, as they always do. And so last week on Friday, if you came to the morning live stream, we talked about the potential of a bull trap as we failed back under this major level, right? 65.02, 65.08. We talked about how a failure back under those highs is the potential of a bull trap, and it leaves behind the trap buyers above that level, right? That's exactly what we talked about on Friday on this live stream, and that is exactly what happened on Friday. It was perfection. As we failed that 65.02 to start the day, you guys can see right here, this was Friday open. We rejected that zone. We created the downside pretty much right off the open, which was sick. It was a beautiful downside move, and now you can see that we needed to hold the 64.60 and the 64.53 PPI low, which we had on our charts as potential demand, which was the low of day on Friday. Look at what happened here as we failed it. We failed below our 64.53 PPI low. We failed below our 64.60, and look at the downside continuation that is coming in. Beautiful. And you are pretty much filling this straight up move from Friday of 2 weeks back. That's basically what the market is doing right now. So I would assume that you're going to probably open, you may not stop here in the pre-market until 6,400, all right? That is potentially where you're heading here. 6,400, this low right here, the Friday straight up move is looking like where you're trading back down to right now. So the question is, do you get there before the open, and does that sort of throw away the downside risk reward? That is a real concern today, right? A real concern today is that, hey, we get down into the 6,400 before market opens, and the downside trade is already done. And you're going to have to wait for some kind of a pop and rejection at a key level before taking a short. Now, if you do break under this 6,400 low, then I think you will have more down into that 63.75 and 63.60. So that could be something to be looking for today under 6,400. But that's going to be after already a very extended downside pre-market, right? That's going to be tough to, stomach a chase short. The 4 hour, you can definitely see some major demand down here at 63.60s, 63.75s. And so that is not going to be the spot to be chasing shorts into today. That's for sure, right? This area right here, these highs, this consolidation, these highs, these lows, and these lows right here, we're definitely not going to want to find ourselves shorting right into these lows and right into the daily 50. You can't really chase that. So what do you want to see today? What you'd love to see is a very nice pop and fade at 64.30. That's the key spot. That's why I have 64.30 as the level on the whiteboard today. Because if you can pop into these highs right here, and you can pop into this rejection right here, and you can pop into these lows from last week, right? LWL is last week's lows. So that was the low of last week, right? The weekly candle low was 64.30. So your best trade today would be a pop and fade, in my opinion, at 64.30. That's where you'd want to look short. If you reclaim 64.30, then there is no short until you move higher into this 64.60. So really the two best short entries to be looking for today is a pop and rejection at 64.30, or a pop higher and a rejection at 64.60. If you find yourself short at these major lows, you are going to lose. Unless you get lucky and the market just tanks, which would be an anomaly, which would give you a bad habits, right? You can't just start chasing shorts today into these major lows. If you do so and you make money, great, I'm happy for you, but that's not going to last long term, right? You're going to do that again next time, and you're going to get ripped. So the best entry, the conservative, not conservative, but the mature entry on the short side is, hey, we're straight down. I need to see this pop. I need to see where this fades. And I want to look to see the fade at 64.30, or I want to see the fade at 64.60. Those are the two spots. So that's what we have to wait for today. And I think you will get that, right? I do believe that you will see a bounce at some point, and you'll come back up into these levels, and you'll see that lower high form, right? If those lower highs form, then you're good to go, right? You're good to go for that short side. So that's something I'd be careful of today. 6,400 demand, 6,375 demand, 6,430, 6,460s. We need to trade at a key level, and we need to see rejections there. That's going to be very key today, my friends. If you get caught up chasing this downside straight down, it could get dangerous, right? So just be careful of that. All right, NASDAQ futures. So we talked about the bull trap last week on a failure back under that 23,690. You can see perfect, and I mean perfect on the NASDAQ on Friday. Look at this. You had this major high from that NVIDIA earnings at 23,690. You failed back under it on Friday. You trapped all the longs above it, and that creates a beautiful head and shoulder and a beautiful trapped buyers. That created a straight down move. I mean, it was awesome. And we've made videos about this on YouTube in the past. The trap buyers, the trapped, trading traps. That was exactly the case once again. So when we zoom out and we look at this hourly chart, we can see that last week's lows, you can see I have that as that blue line. That was 23,370. That was the lows of last week, the lows from Monday into Tuesday. You are trading below it. You are also trading back below these previous major lows, these previous major highs, these previous rejections here, and the lows of last week here. And you can see that, in my opinion, is your best pop and fade spot on the day. If you can pop higher, create a lower high at these lows, at these lows, at these highs, at these lows, and at these highs, that is your best entry point on short side to continue this move lower. A pop and lower high back at last week's lows and at the 23,330 area. You can see our 23,330 area, which is this exact low right here. Look at what 23,330 did today. I mean, perfection. Look at that 23,330 spot. That is a beautiful drop, retest, rejection, right? That is our beautiful bear flag break and retest in the pre-market, which is just gorgeous. Look at that right there. You have a nice break under our key 330 level. You have a retest into it. You see a break of this of the bear flag right here, and what a downside move, man. Already provided over 200 points here in the pre-market. Oh, just about 150 points. Just off that retest rejection of 330 there, which is incredible for the futures boys out there. Sick move. Trading as if it's intraday right now, the NASDAQ futures. Now, here's the problem. That was the trade to the downside. And guess what? You're down into these demand lows. And guess what? There's going to be plenty of retail traders out there that try to short the open and get ripped on a straight up move off this level. You can't do it. You can't do it. You can't short into these major lows. Major low here, major low here. Definitely some risk of a short-term bounce out of this level today. And that would be the bounce you want, right? To look for that fade. You don't want to be shorting into these major lows. Now, the question is it just, do we keep going lower? That's the question. Is it just a continuation to the downside? If you break under 23,000, you are going to trade back to this major 4-hour high here. Excuse me. If you break 23,000 today, you are going to trade back to this major 4-hour high at 22,800. And that's pretty clear, right? There's really nothing under 23,000 to 22.8. That would be a really nice short there. Back down to this major 4-hour high right there. If you break 22.8, look where you're coming next. You're coming to 22.6. And if you break 22.6, big downside right into the 22.2. All right? So there is some very clear downside levels to be looking for, breaks and continuation here on the NASDAQ futures. Now, the problem is you need to clear out this 23,000 low, in my opinion. It's 23,000. It could be more like 23,035. Right here, 23,035. It could be a little bit more like that, right? See these lows right here, 23,035, 23,035, 23,035. If you break that, you probably see it continue, right? You probably see the downside start. And look, this is sort of what I want to show you. Take a look at this at 23,035. Let me show you something real quick. You're going to be 23,035. Right here, 23,035. What's it going to do today? Right? 23,035. You saw multiple reactions at that exact level. 23,035. That is this exact low right here. If you break that, maybe 23,000 has some kind of whole number strength, but I would say that it's probably going to see the downside move. If you see a failure under that level today, I'm saying 22.8 pretty clearly. Now, you're going to have to understand if that happens before a bounce today, you are going to be very, and I mean very extended to the downside. So I would just take it a little bit on the easy side, right? If I see that failure come in, I'll try it, but I'll also maybe scale down understanding that we are very, very extended to the downside, and maybe that is a trap, right? So let's be aware of it. Let's understand what's going on. Let's be cautious of shorting under, after a major downside move in the pre-market. However, a break of this low definitely influences the next leg lower into 22.8, which is very, very, very clear on the chart. Best short would be a bounce off this demand, right, back into these highs, and then we re-fade this on a retest rejection. That's the A-plus trade that you want to look for. Now, the market doesn't always provide those best scenario trades, right? The best trade is a pop and fade back at these major lows from last week, turning that back into a major failure point right here. That would be the sick entry. Now, the market may say, nope, I'm going straight down under 35, and that's what's going to get me to 22.8. Either way, in my opinion, you're probably going to see 22.8. The question is it a bounce and fade, or is it just a straight down move? That's the question that has to be answered today. So, we shall see. That's not something you can guess right now. You're just going to have to watch what happens at those lows. SPY. Oh, big breakdown under that. Yeah, we're under 640. So now this becomes a rejection point at 640. Let's change that real quick. That is now a very clear failure point on the chart, which is also the daily 20. That's going to be really nice there. 640, if that stays as a rejection point, anywhere between 640 and these lows here at 639.66. Okay, we got that. So that is good there. That is now our pop and fade area under the daily 20 at these previous highs. If we get that, I like downside into this Friday low at 637. Under 637, you're going to 633. Pop and fade 640 in the daily 20 or pop and fade 642, 643 zone. QQQ. We're breaking under this Friday low at 639.27. You break that, you're right into that daily 50, which is something you got to be careful of today. That daily 50 could bounce a little bit. The target would be down at this 558.84 low. If you break under 558.84, you are going 552. There's really no question about it for me. If you break these, it's probably 557.50. Right, these lows, if you break below these highs, these lows, and these lows, you're likely coming back down to this 552 low here. But you can see we still need to be careful of a bounce off this level, just like it did here, just like it did here, and just like it did here. So you really can't get that aggressive short into this 557, 558 area on the Qs, because you can see previous bounce, previous bounce, previous bounce, and you don't want to be short here and see this happen again, right, for the fourth time. So got to be careful of that today. That's going to be a key spot to be cautious of. It looks like a failure underneath this Friday, or this Friday low here at 563.27 is sort of key right now. I'm going to leave it as it is for now, but you can see you're failing under this low right here. Under that low, I think you're probably going to start to see a move towards that 558, 559 lows. So let's see. All right, let's see. That NASDAQ is coming close to our demand lows. Our ES is coming close to our 6,400 demand lows. Our SPY looks like it's navigating to the 637. We're going to have to be careful of how much downside this has before the market open. That's going to be tricky. It's going to be tricky. And you guys know in your hearts that the best trade to the downside is a pop and fade. It's going to depend on who's patient enough to wait for that to happen. We shall see. Mikey, appreciate that, brother. All right. IWM, big breakdown underneath our 235 spot. That is really nice. And it even, look at this. Oh man, look at that. Look at that alert I had, and look at the failure underneath that low. Okay, hold on. Wednesday's lows. So now this becomes a major failure point at 235.40. Right, look at that. So let's go ahead and get this chart marked up. I didn't chart this one yet today. So 235, that's very clear failure now. Underneath those previous highs right here, right? Look at these previous highs right here. Look at the failure right there. You're also now failing under this Wednesday low. Look at that right there. Retest rejection exactly at that Wednesday low. If you break under this 231.15 low, man, you are going lower. There's no doubt about that. If you break below this 231.15, that should give you a move lower to fill this pretty much straight up move from Friday. I'd say at least 229, and possibly lower. But to start, 229 would be the target to the downside. Let's go ahead and mark this up a little bit differently here. I want to make that 231, 230. Yeah, I want to do that. Okay. If you break under these highs and these lows, you are definitely moving down to at least this high here at 229 and possibly down into that daily 20. So yeah, I like this a lot. Watching this double bottom low right here, that is the key on the IWM. You break that, you're seeing free fall. You're seeing free fall under that right there. 231.15. 231, yeah, 231.15. That's the watch. Let's see. All right. So that's the market levels for today. If you guys could, please take a second, press that like button for me. If you are new here, subscribe to the channel. Let's go ahead and move on to some stocks. Tesla. So Tesla, the rejection at 350 on Friday was absolutely sick. Look at this. Perfect. Previous rejection on Monday, turning into rejections on Friday. Trap buyers above. Gorgeous downside move. Gorgeous. Just textbook. Fueling to the downside. You are at 327 demand, which is a major low here. If you look at this hourly chart, look at this 327, 327, 327. If you fail 327 today, I think you're probably seeing at least 325 and, honestly, likely these lows at 320 to give back this straight up move, right? Tesla went straight up off 320 on last Friday, 2 Fridays ago, and you can see that we're possibly looking to come back down to retest that level. So 327 is the demand that you want to see hold if you are looking for this to bounce. If it does not, maybe that daily 50, but for me, that 320 looks like a pretty decent target. The pop and rejection play is really nice at 335 if you can get it. Look at this, 335 lows, 335 lows. Look at that failure right there. Perfect. So 327, cautious of bounces out of this zone today. I would look for 335 or even 340 to be lower high rejections. That would be beautiful. Okay. All right. So I want to go into the sector that you need to keep your eyes on today, and that is the SMH, my friends. And this is looking pretty ugly on the SMH, and it's possibly the move that, finally gives us some downside on the semis. And so this is big. So the SMH put another rejection at these equal highs around 298. You had a little trap buyer session here. You had a little bit of a, you guessed it, head and shoulder formation, right? Left shoulder, head, right shoulder at these highs, which is sort of interesting. And if we go here and put on the volume profile, you are going to see something that is likely a little concerning, right, to the bulls. And you can see that if we break underneath that 280 level, right? If you break under this 280 level, there is no volume here, my friends, until around 262 and around these previous highs back here, right? These previous highs back here around 262. is really where that next volume really starts to come back in. So there could be a major downside move under 280 into 262 on the SMH to fill in this sort of straight up move that happened back in June, right? That is something to be paying attention to. That is where opportunity arises. That is where aggression should be taken if we start to see this level fail. So major lows here, I would say you mark these out at around these lows from this day here at around 279.19. That's sort of the major break there, 279.19. It might start before that though, right? Like it might start to slip before it even gets there. 279.19 is this major 4-hour low right here. And if you break that, these lows would be the first test, 273, right? That would be your first little, potential hold there at 273, maybe. It's not a big spot, so I wouldn't really trust it that much. But that 273 is a little bit of something there for sure, Jason. Yep. But if you break that, you're tanking, right? So I think underneath 279.19 in this 4-hour low, you are going to start to see the slip come in. Now the question is, how many people are going to try to chase this short before it breaks 279.19? And how many people are going to see the SMH do the exact thing that it's done the last few weeks? All right, that's the question. So the last time it looked like it was going to fall, guess what? Nope, bounced. Last time it looked like it was going to fall, nope, bounced. Last time it looked like it was going to fall, nope, bounced. Last time it looked like it was going to fall, nope, bounced. So the question is, this time it looks like it's going to fall. Does this happen again? Do people get caught chasing into this demand low? Or is this the time we finally get the drop below this low? That's a big question today. The best short is still going to probably be a bounce into 289 or a bounce into 293, but man, oh man, does this thing look sort of gone at this point. Big watch to the downside today underneath that 279.19 if we get it. And if that happens, you definitely have some very interesting downside watches on semiconductors today. So, NVIDIA, you have a major daily low here on NVIDIA. Right here, major daily low at 168.80. Underneath 168.80, I think you come to this daily low at 164.50. AMD, really nasty looking daily chart. Look at the failure here on the 4-hour. Look at this. This is a very, very nice downside watch today. That 169 level, it never got back above it. It rejected the daily 20, and it's created this wedge break right here, which looks really nice. AMD underneath 157.80, which is the double bottom lows right here. Underneath that, which it is literally testing as we speak. I don't see anything stopping this till around that 150 level. Maybe a little bit of support around this 152.58 area. Little bit of support there, possibly 152.50. But, I mean, if this thing picks up momentum underneath this double bottom daily low, I think you're coming right down into that 150 low. So, big watch there. Underneath this 150, you are going to see more. But that is probably going to see a bounce at that level. So, big watch here, AMD. Definitely a top watch on the downside today. Broadcom, another one that's created a really nasty wedge break. You can see here. Look at that 300. Break and retest rejection under 300. This low, 291.63. You can stay below that last week's lows. I mean, I'm looking at 280s. 281, right? Daily 50, maybe some support. Earnings are this week, so maybe some caution there, but definitely some watches there. MU under this 116 low could be pretty nasty. Look how MU popped into that major 122 spot and just got totally smacked. Wild. So, going to put my alert at 116 MU. Regardless, AMD is my top downside watch if SMH goes lower. So, that's my watch there. Next major downside watch here is Meta. Meta, if we look at this daily chart, has a gap to fill below. This is very interesting today. Meta has been weak. We've been talking about the potential of a Meta retest rejection here, and look what's happened, guys. We've been talking about this retest rejection for like a week and a half now. These major lows into these highs, look how perfect. Break, retest, rejection. Perfect daily chart setup for downside. Now, There is only one level left here on Meta, and you are trading right at it as we speak. It is these daily highs right here. If you fail below these daily highs right here, which is 724.47, you are gap filling. Gap fill comes down to around this high right here, around 708. That's your full gap fill right there. If you break below that, you're coming down to that 700 spot. So 708.50 is gap fill. So we can be watching that today. Back down to that 708.50 gap fill level. If we go to the 4-hour chart, we can see right here, underneath that 724.47 right here, I don't see anything until gap fill. And this could be a great opportunity today. Now, the key thing you want to see reject, right? What you'd like to see stay weak is these lows right here. See this low? That's 731. If you stay under this daily low right here at 731, that is a retest and lower high rejection. That would be really nice. So, Meta's definitely a top watch today. Keeping that on the charts. Amazon, weak, back towards that 225 demand. Let's see what happens here. 225 demand is that 224, 225, definitely a key demand. You break that, you're right back into 220. Keeping eyes on that. Google. Google. Now, this is an interesting one because what is Google potentially about to do? Google is potentially about to turn previous all-time highs back into rejections. So last week, Google was the strongest tech name holding above the daily all-time highs at 208.70. Right here. See this on Friday? 208.70 held. Now, if Google turns 208.70 back into a failure point, that is a very clear trap above the all-time highs. And if you fail under that 208.70, I could see a move down into this 206 again. Not really my favorite short because it's a very outperforming name, but it would be a very telling fail back under 208.70 on Google. Palantir. So, Palantir, 149.37 to 148 is a major demand low. That is last week's lows. That is right here. That is right here. This zone right here is a major demand to be careful of. If you fail underneath that 148 right here, I don't see any reason that this is stopping until the lows of this daily candle down at 142.35. All right, look at this daily chart. So this is a major daily low right here. That is last week's lows at 149.37. That is also that 148, previous demand area here. If you break under 148, I don't see any reason that this doesn't trade down to this candle low and these lows right here at 142.35. That is very clear. You are failing back at this shelf here, right? You do a little break and retest rejection. And that is starting to look very, very tempting. If you can break these lows. That's a big if. And you can see I have an alert set on that. So, watching that. The next one that I've been basically hawking for like 3 weeks now that I still haven't taken a trade on is Hood. And this one is definitely a major one. You guys know we've been watching this Hood high that's starting to sort of, just sorting, geez, I can't talk. Sort of failing to move higher, right? You've been seeing that happen. You look at this right here. 105 failure. Look at this low at 99. If you break that low at 99, I think you're coming down to these lows here at 90. So definitely keeping eyes on this 99 low today on Hood. If that Hood fails under 99 and that daily 50, there is, I think, some free fall to be had here. This is definitely something that I'm keeping eyes on. CRWV, really nice failure. After everyone was sort of horned up on this one into the daily 100, we at this live stream said don't long this until it breaks over the 100. What did it do on Friday? Thursday into Friday, it failed the 100 SMA to the T. So that was a great call. Now, you still have this Friday low a day here at 96.32. If you fail under that 96.32 and turn this low into new highs, you're coming down into 90. This could be a really nice fade to be watching on CRWV. Apple. Not much on Apple yet because it's just in this channel, but you can see that Apple is starting to fail major highs here, 233, 235. I'm not going to short this until it breaks under 225, but definitely something to watch there. MongoDB is rejecting the exact weekly chart level that we have marked out at 321, 321, 321, and it's failing 321. MongoDB needs to hold above 297 right here. 297, this is a must-hold low from last Thursday. If you fail under 297, you're trading down into 275. If you fail under 275, you are gap filling. So I have alerts set at 297 and 275. These are big watches as you fail this 321 high. This is key. What happens at 321? It's been a high flyer. Does it need to gap fill, right? Does it need to gap fill? Something I am definitely watching here. Here's your daily chart into this major rejection. Look at this gap down below. We shall see. I don't think it's that weak to see a full gap fill, but there might be some weakness that comes in off that rejection. All right, that's going to be it. Some really nice watches out there today. The NASDAQ is continuously moving lower here. We are down into the demand now at 23,120 to 23,035. The ES is down at our 6,400 demand. Desi spent 2 hours on Zoom last night, another hour on Zoom at 6:30 this morning to prepare. I appreciate that, blessed. 637. SPY. Yep. QQQ. Failing under that 563.27 Friday, or previous Friday low. I'm going to turn that red now because technically that is now a failure point. Big downside into the open. It's going to get interesting out there today, folks. Is there a nice bounce that we can fade, or is this thing just sort of make everyone chase the downside today? It's going to be very interesting. So, with that said, I hope you have a fantastic trading day. If you want to trade live with me on a daily basis, you can check out the link down below. If you want to get a free morning watch list, you can check out that link down below as well. Not bad on the likes today. 2,800 people, 1,300 likes. Appreciate that, guys. And I'll see you tomorrow. Peace and love.